Hello and welcome to FinTech Insider Insights. I'm Rachel Pandian, Ventures Product Lead here at 11FS. In this episode, we're talking about Islamic banking and the challenges of launching and scaling Islamic financial services in Western or non-Muslim countries. Since the turn of the century, Muslim populations across Europe and North America have increased massively, with 44 million in the former and over 5 million across the US and Canada. However, these regions are still heavily Christian, with a legal and banking system that have been historically interwoven with the church. As the needs of the population become more diverse, how does the financial ecosystem scale to meet those needs? With more Islamic banks launching in non-Muslim countries and the potential market in these areas continuing to grow, we want to discuss how Islamic financing works, what it takes to scale, and what Western banks can learn from Sharia-compliant services. To have this conversation, I'm joined by an amazing panel of experts. So firstly, welcome back to FinTech Insider, Abdul Haseeb Basit, co-founder and principal at Ellipses, CFO at GDF, and partner at the Islamic FinTech Fund. A whole list of things there, but welcome back to the show, Abdul. For those who don't know, do you tell us a bit about yourself and what you do?
Thanks, Rachel. Great to be back on the show. I'm Abdul Haseeb Basit. I have a background working for over a decade in banking before. As CFO, I became part of the team that set up Innovate Finance, the UK's membership association for fintech. After this, I co-founded Ellipsis. We do research and advisory. One of our mainstay pieces of research being the Global Islamic FinTech Report, for which we released the latest version in February. We also do venture building in ethical finance, and we're an investment firm now focusing, as you said, on a nascent Islamic FinTech fund, which is aiming to solve the capital gap in the Islamic FinTech market.
That's great stuff. And excited to hear what you have to say about the few of the things that we've got on the cards today. It's also a pleasure to be joined by Dr. Mohammed Sawaf, co-founder and CEO at Manzil. Hi, Mohammed. Great to have you on the show. Do tell us a bit about you and Manzil.
Thanks very much, Rachel, for having me, and it's a pleasure to be here. My name is Mohammed Sawaf, founder and CEO of Manzil. We are the first Islamic fintech out of Canada that not only manufactures Sharia-compliant investment solutions, as well as mortgage products, but we also distribute them through our digital platform available to every Canadian.
That's amazing. And I think there's a lot to be said about the Canadian market and how it's shifting, and maybe some learnings that we can take here in the UK. Finally, a pleasure to be joined by Uma Suleiman, Chief Risk Officer at Wahed. Hello, Uma. Great to have you here as well. Also to you, a little bit about you, what you're doing at Wahed and what you're here to talk about.
Absolute pleasure to be here, especially alongside my esteemed co-panelists. So Chief Risk Officer for Wahed. Wahed is the world's largest Islamic fintech. I actually manage risk, compliance, and Sharia. I've had a long background in risk within financial services. I used to be former global head of risk at HSBC for their digital banking. I also sit on the board of the UK IFC, which works as an organization to help build the ecosystem around Islamic finance and its alignment between Islamic finance principles and ESG and SDG goals. So day job changes constantly. We're constantly expanding in terms of what we do, new products, new business lines, and new geographies. So no 2 days are the same.
Great. And I'm sure you all have lots of experience and much to say about the topics we've got on today. So we should probably just dive in. To kick off, we should probably acknowledge that we have many listeners around the world. Most of them work or have worked in financial services, so they might have a basic understanding of Islamic banking, but they might not understand exactly how it differs from traditional Western banking. In fact, we asked them on LinkedIn where their level of knowledge is at, and 39% said somewhat knowledgeable, 35% said unsure of the details, 7% said very knowledgeable, and 19% said not very knowledgeable at all. I'd like to challenge some of the somewhat knowledgeable and what that means. So with that in mind, let's get started. Abdul, to start us off, can you give us an overview of what Sharia compliance in banking and finance means and how it works in practice?
Sure. So most people's understanding of Sharia compliance in Islamic finance extends to understanding that there's a prohibition on earning interest. However, the principles go much deeper than that. The often cited Quranic verse states that God has forbidden riba, which loosely translated is an excess or increase, and has permitted trade. So from this, we can understand that trading and creating income or wealth are permitted in Islam, as long as they're generated from legitimate trade and investment, which means certain activities are therefore prohibited, such as participation in interest-generating industries, tobacco, pornography, gambling, pork industries, sale of arms, etc. The basic tenets of Islamic finance are therefore underpinned by this concept of risk sharing and not creating exploitative transactions. And interest as a form of riba is seen as being exploitative and therefore not allowed. And there are other aspects such as eliminating speculation and uncertainty in transactions. That's a very simplistic explanation of it. I'm sure if my co-panelists want to expand on that, I'd be happy to give them a chance to do so as well.
Yeah, I mean, just to add to what Abdulaziz is saying, Islamic finance transactions have to circumvent real economic activity. That's a key fundamental of it, versus simply making money from money, as you've heard. So as well as the prohibited activities, actually you want to create value through your financial transactions in society.
Yeah. And I know that zakat is very important and we see it a lot in Islamic banking apps. I think that that's something that we don't necessarily see as some of the core financial products within UK banking apps, which is a key difference. Another key difference, and Mohammed, I wonder if we can turn to you. Could you talk us through profit and loss sharing contracts, how they work and what the relevance of those are?
Absolutely. So, when we think about Islamic finance and the extension of, Omar and Abdulhasib's thoughts, there has to be some sort of participation. Sometimes the term is coined as participatory banking or participatory financing. And this is really to create an equilibrium between the financier and the client or the end user. Currently today, when you think about a conventional loan or debt agreement, it really is one-sided, where somebody offers, the client to use their money with pretty much a guarantee that they'll earn more money back. And there's no effort, used within that transaction or some sort of productive value to society to earn that return via revenue or profit. And so that's the one side. The other side as well, as Omar had mentioned, the sharing of risk. And so when we think about participatory financial transactions or participatory banking, is there an element of shared risk temporarily or even long term as part of a musharaka agreement, let's say, where the financier has not only the vested interest to see this transaction through, but should things go awry, are they then taking on some sort of loss position aligned with the client that they participated in that transaction with? So at the end of the day, when we think about Islamic banking generally or as a whole, we don't look at Islamic banks as lenders or debt providers, right? They are participating in a contractual agreement that either via trade, a buying and selling, or a long-term relationship with that client with that asset as the backing.
Yeah, and I think we like to position, in the UK at least, that's what a building society in theory is meant to do. It's meant to put itself in the same position as its clients. But ultimately, a lot of Western or the traditional banks as we see them in the West, they're putting the risk on the customer and it's solely the customer's responsibility. And that, I suppose, is one of the key differences between the Sharia compliant and non-Sharia compliance services. Do you think Uma, do you think it's as simple as that, or do you think there's more differences around that?
There are more differences around it from the perspective of understanding what economic injustice or oppression looks like. Now, these are quite heavy terms, but I think when you pull it back to its basic understanding and philosophy, is that people should be treated fairly and treated equally based on their economic input into a transaction. So if we look at conventional banks treat money as a commodity and they lend it against interest as its compensation. So they are there simply to make money from money. Therefore, those that have money have a greater ability to make more money. Add to this the ability to create money out of nothing. Okay, so what it's doing is feeding an unequal society. That's the reality of it. And when you have risk all loaded on one side, one party completely protected, and they kind of wrap up their risk and sell it for money, and the other side take on all the risk, then it's actually creating financial inequality. Now, if you look at something like Islamic banking, and I have to say this up front, I think Islamic banking is an oxymoron. Okay, Islamic banking, from a pure perspective, shouldn't exist. Banks are the wrong medium for Islamic finance principles. We can perhaps touch upon that later, but let's go with the term Islamic banking. Islamic banking products are usually asset-backed and involve trading of assets, renting of assets, and as we've heard, participation on a profit and loss basis. And what you see is actually it reframes the whole engagement. Now, it's not just, I've got lots of money and I'm going to make more money from it, but I've got some skin in the game and I really want you to do well because my money's on the line. It changes you. The whole psychological approach is different. So it's a lot more than what's been said. And I think that society as a whole would benefit much more from these types of principles. And it's not just Islamic, by the way, just to add, sorry, I know I'm going on a bit, but this prohibition of interest was something that precedes Islam. It's something that's shared by the Abrahamic faiths. Even philosophers, Aristotle said, money is fundamentally sterile. Okay. And so the exchange of interest is selling nothing for something, because they understood that actually, from a philosophical perspective, it damages society.
And putting religion to one side, or faith at least to one side, in the context of finance, 'cause I think I love what you've said there about Islamic banking. You're exactly right. Banking is not the medium for this conversation, but you spoke at the start around the sustainable development goals, what the UN are trying to do, and how many different financial institutes are trying to rework their propositions because, for the good of society and for this and for that. And it almost feels like lip service versus, Islamic finance. It's at its core, it's at the principle. And really, there's a huge market for this that goes beyond just what we understand to be Islamic financing products. It's actually around building propositions and services that are around improving the whole society and not just the individual, more realistically the shareholder value, because that's what it feels like most banking propositions are about. So, moving on a little bit, how big is the market for Islamic finance? I mean, obviously huge, because if we think about it that way, it's everyone. But what do we think about what it looks like in the West and how the market has grown and what the opportunity looks like? Mohammed, what do you think? Because I suppose you're a little bit in Canada, but maybe some experience across the pond too.
Oh, absolutely. So, Canada as a Commonwealth country, we definitely look to the UK, right, for, as precedent, I would say, within common law. And obviously, of course, having established, under the FCA in 2003, Canada currently has about 2 million Muslims, which is about 5% of the population, or 1 in every 20. It's growing to 3 million by 2030. So over the next 7 years, due to favorable immigration rates and, of course, above average birth rates. When we look south of the border, there's an additional 5 million Muslims that we can tap into. So about 7 to 8 million total in North America. Percentage-wise in the US, is still much smaller, however growing, and it's set to double over the next 20 years versus, the next 10. And when we've sized up the opportunity, at least from a halal mortgage perspective, on the Canadian side, it's about a $250 billion market, and that would grow to about $400 billion with the increase in population. On the wealth side, we've estimated anywhere between $20 billion to $50 billion that could potentially be managed just within this demographic group. And then, of course, that doesn't include any additional products or services such as checkings or savings accounts, and other financial transactions, let's say auto or commercial or student financing. And so when you're in a Western market such as North America with such little players in the market, the opportunity is huge, right? In fact, first mover advantage is still there. For the MBAs that are listening, it's really a blue ocean opportunity till this day, and this is exactly what we're tapping into. And so, would love to hear remarks from Abdulhasib or Omar on the UK side, or even the European side of the equation.
So I think when you talk about the sort of the Islamic banking space in the UK, and we've already touched on that, banking perhaps isn't the best medium for delivery of Islamic financial services. It's important to understand the context of why these banks exist. They weren't set up to cater for the local Muslim population, but essentially for international trade and investment opportunities. So you have this really strange situation where you have a number of Islamic banks authorized and regulated in the UK in the market, but very, very low penetration of usage amongst the indigenous Muslim population in the UK. And the fact that most Muslims in the UK don't feel that those banks or banks in general provide them an adequate financial service. So what's starting to change that is the Islamic fintech space. We first conducted our research into Islamic fintech in 2017. We found that the UK, which we didn't expect, was the largest producer of Islamic fintechs globally at the time. And this was because we had the talent base in the UK, we had the regulatory environment in the UK, and we had a booming fintech and tech sector in the UK. So all of these things organically came together and really started to push that industry forward. Now, fast forward 7 years, the UK is still in the top 5 producers, although the likes of Indonesia, Malaysia, UAE, Saudi Arabia have caught up and overtaken by the number of fintechs that they produce, or Islamic fintechs that they produce. But I still think that Islamic fintechs really have a role to play in Western markets, but to serve not only the Muslim population, but in a more developed financial services environment, launch your service, test it, solve problems for the local Muslim population, and then scale it outside of your jurisdiction. And I think the two gentlemen on this call, on this podcast, are really testament to that.
If I may just extend on Abdul Hasib's thought, just because this was part of my doctoral thesis work that I conducted in Canada. So we looked at, we did the largest study in Canada around the social and religious determinants amongst Muslim Canadian consumers with respect to their propensity to adopt Islamic financial products and services. And not only did we find an overwhelmingly positive, let's call it, attitude towards Islamic finance, but in addition to this study, amongst other third market studies that were conducted specifically within the Canadian market, there's upwards of 80% that have indicated, that they would adopt these products and financial services as long as they were available. We even went deeper to say, well, is there a willingness to pay more for these services? Which is yes. And there's a theory around the cost of being Muslim. And we all know that until there's economies of scale and kind of market or mainstream market around these products, of course, that pricing can come down. So I would suspect that within Western markets like the UK, France, Germany, that hold large populations of Muslims, that these percentages would be either equal to or even higher, considering the fact that they're much more developed within this space than we are.
Yeah, I mean, when we go back to the original question about how big is the market, I would say it's huge. It's really untapped. We looked at some of the core reasons that it can develop. When we look at ethical banking, ethical finance, and once you strip away and you look at Islamic banking purely or Islamic finance from its principles basis, then actually that's the entire market that's available. Look, the financial crisis of 2007 to 2009, it was probably one of the most disruptive global events we've seen. That, and obviously since then COVID, and since the depression from a financial perspective, there was nothing like it. But it wasn't unique. Since then, we've had at least 3 decades worth of financial instability, large major banking crises have occurred. Why, actually? And then when you start looking at some of the reasons behind it, it's those principles that, Islamic banking tries to avoid: speculation. There was no real activity. When you're dealing with trillions of transactions taking place and value being created for futures and options that have no real value, then actually it's damaging. And I think as a society, people are becoming more ethically aware. They're more connected than they were ever before. People don't want to compromise on actually these things anymore. So we've seen that generally. So I think having better banking and better financial products, and as Abdul Hasib said so eloquently, that the rise of fintechs who don't have the same, restrictions that classical financial institutions had, they're able to then meet these demands and actually meet these requirements. And so fintech, there's definitely a disruptive revolution happening.
Can I ask a question?
Sure.
And this is to Omar, because I've heard you speak around the ability to enable fintechs is probably the solution with respect to this market. What are your thoughts on having these fintechs partner with some of these conventional banks or quote unquote Islamic banks to use, let's call it, their back office or operations as a way to scale and, of course, attract the necessary licenses to enter these markets or domains, because that's the difficulty that we're facing here in Canada is, we don't have the ability to get a license, right?
Yeah, I was going to ask a similar question because I feel like we're talking about the availability and the opportunity there. But actually, as an emerging fintech, if you're like, hi, here's my really good for the society banking proposition, like VCs will often laugh you out the doors. And, you need a license, you need funding. Banks, in theory, they are the vessel to help you achieve some of those things. However, they are also, in some instances, the problem. So how do you balance that for some of these emerging fintechs?
And don't forget a niche demographic of 1.8 billion people.
Very small.
Very small. I love that excuse.
Just to answer him, Mohammed, look, I'm a bit of a purist when it comes to this, and I don't think that you can ride two horses at the same time. I fundamentally believe that conventional banks have created a lot of issues in society, right? And I believe that fundamentally, I think interest is something that damages society. And banking is only one form of the interest that we see globally. If you want to look at the developed world versus as you'd say, the developing world, they cannot achieve development because of the debts that they have placed upon them, foisted upon them, that banks are their mediums to deliver. So, and I saw this when I was at a global major bank where they were trying to buy up smaller fintechs just to make their own technology better. And so fintech generally forms into two parts, either revolutionary or evolutionary. But fundamentally, if your banks, when they're trying to buy fintechs, they're looking at that kind of evolutionary space. And if fundamentally the products aren't delivering good or aren't a vessel for good, then you're only enabling them to deliver it quicker, right? And to reach more people.
Yeah.
So we need better sources of funding for people who come up with great ideas like yourself.
Thank you.
And there are people out there who do that.
Yeah. And I think there's a real opportunity, I think, in that space for fintechs, not just around creating these offerings, but also creating the offerings to support these businesses. Like I don't think we can understate the importance of some B2B players to help enable new and emerging fintechs that will offer these Islamic financing solutions to customers. Like, do you need better account management? Do you need better cash flow management? Like, what are the different services that we can leverage? Because there's a lot out there, but B2B is so underserved and SMEs are still struggling to try and get these propositions to market. There is so much more that we could say on that, and just to really delve into the challenges of trying to launch fintechs even in these established markets. But we're going to have to take a short break here. And so after this break, we'll be coming back to consider some of the wider issues faced by Islamic banks or Islamic financing providers, but also what Western banks can do to support this growing industry and what lessons can be learned, which sounds like quite a few. Don't go anywhere. Welcome back to FinTech Insider Insights, where we are discussing the growth of Islamic finance in non-Muslim and Western countries. When we talk about Islamic finance services in the West, we should also address some of the wider cultural challenges that come with that. Abdul, how big of an issue is Islamophobia, and does it create additional barriers to entry for Islamic finances and fintechs? And I realize that's a heavy question to start us off with.
It is a heavy question, but it's a real problem. Islamophobia is real. It's rooted in a form of racism, and it's something that unfortunately many Muslims in the West face even today. We have a government in the UK that refuses to adopt the definition of Islamophobia as defined by the All-Party Parliamentary Group for British Muslims, which doesn't help the problem. I've experienced Islamophobia explicitly in my career in banking, and more so, we face it in less explicit ways every day. Mohammed used a term which I was going to use, the cost of being Muslim. This is something that industry insiders use all the time. Now, it used to mean that being provided an Islamic finance product was slightly more expensive, and that was the cost. But actually, it's morphed into something else. It's become this thing where if you are called Abdul or Mohammed, as an example, you are more likely to be discriminated against by financial services firms. And real lived examples of that are that the largest Islamic fintech for the charity sector, crowdfunding platform, has been struck off by its payment processor because they deal with Muslim charities. Muslim charities themselves in the UK cannot open bank accounts with conventional banks, and more amazingly, they can't even open bank accounts with Islamic banks these days. I fundraised for an Islamic fintech, which was a regulated, FCA regulated Islamic fintech, had its own AML KYC practices, has had a anti-money laundering officer. We raised money from Muslim angel investors. Those names, when they appeared on our cap table, even though we had done all the KYC checks on them, meant that our bank, a UK neobank, decided that they were going to shut down our bank account. These are all very, very real problems that we have to face as Muslims. The banking sector is nowhere near even understanding these problems, let alone solving them. What needs to happen, and I think this needs to go across the board, not just for Muslims. Any bank that shuts down your account as a business or a retail consumer needs to give you an explicit reason why. Today, they are not mandated to give you a reason why, and I'm talking specifically about the UK. Thereafter, there needs to be a process where you can appeal that with an organization, let's say, for example, the Financial Ombudsman, where the Ombudsman decision is binding. Either they have to reopen your account or provide you compensation if the Ombudsman feel that it's been discriminatory in any way. So these are things that we need to see happen in the industry. These are things that obviously affect Muslims, but affect a broader population than just Muslims. Thereafter, we could probably, go on for ages talking about how difficult it is to raise funding as a minority founder. Those are challenges that are, I think, inherent in tech anyway, and we're all trying to navigate those. And hence why organizations like Wahed, like Curate Capital in the UK, like us at the Islamic FinTech Fund, are really trying to help solve these challenges and direct capital from Muslim audiences into Muslim founders and startups in the Islamic FinTech space.
Yeah. And I was recently speaking with Dean developers. They're trying to run a series of events to build some understanding of how to break into tech. But, they were saying that the biggest question they're often asked by people who attend is, how do I break into technology? Because, we're talking about financing and all of this. There's a level of systemic racism or Islamophobia that's built into those financing decisions, but also just on the experience, like how do we get people into those roles so they can learn about how these systems work so they can go and launch their own thing. Like we're sitting here in a group of people who are in leadership positions in fintech organizations, but actually it's so hard for the new generation, for existing generations to break into technology, to influence change from the inside of these existing organizations. So I think that it appears in so many pockets that it's a huge challenge to overcome. And it's amazing that we're speaking to the three people who've been on that journey in multiple different organizations. But I think at the moment that still feels a little bit like the exception. Mohammed, what do you think?
Absolutely. It's definitely the exception. And I'm sure both Omar and Abdul Hasib can, appreciate this, that, there's a lot of mentorship required, for the new generation, the next generation. We all do our best, really, as pioneers within our own fields, within our respective markets, to mentor, to assist, in the new generation, the next generation, to enter entrepreneurship, to enter fintech, to enter, or to create ideas within their own organizations, to unshackle, right, these sentiments of Islamophobia. And, I think the ecosystem or the Islamic, economy is, the foundations are being laid. How long does it take for us to kind of get to the end result that we're looking for really is going to be based on our effort and how many we can corral around, these efforts, because it is a community-based objective, right? There are, again, 1.8 billion of us. If we all supported each other on these initiatives, if we had investors, Muslim investors investing in Muslim products and Muslim, businesses, that circular economy starts to, move in a much more rapid pace than what it currently is. And I think that's really what we're trying to, push out there is that, what we're establishing here may be precedent setting. If we're already in an established market, that may, work in our favor from a risk perspective, from a trust perspective, especially in the fintech space, right? Especially when you're handling people's money, closing that gap between trust and credibility is the number one thing that we focus on. Because consumer protection is at play, compliance, regulatory, legal, tax, all of these things that we're working against, literally salmon swimming up against the river. And that's what we feel like all the time. You're working against political will at the government level. You're working against comments and questions around, well, what are your AML and KYC practices, as Abdul Hasib alluded to. You're working against niche markets, and how big is this market opportunity, and we don't see it the way you see it, right? So a lot of these stigmas, these taboos that are out there, we are really trying to counter those narratives on a best efforts basis and prove really it really is a prove them wrong mentality. And I think that it's the tide is starting to turn, and with more support from the community, it'll only strengthen that narrative for us.
Yeah, for sure. And I mean, taking it back, why are we trying to do this? All of us here are trying to launch new and better services for the communities, like of our customers and the consumers on the other side. So Uma, a little bit about Wahed's strategy, because you actually have a little bit more of a branch-based service, which I wonder if that's to do with the needs of your community and how you can serve those better by having a presence on the ground. But could you talk to us a little bit about how you're reaching out to customers and trying to provide that support in a way that we haven't seen from as many fintechs on the ground in the UK?
Yeah, so I mean, look, if we look at the kind of slight history of the Muslim community in the, I'll speak to the UK, and it's going to be the same for North America and the rest of Europe, but specifically to the UK, where I'm from. So what we're seeing is that there's it's an immigrant community at first, and then second generation and third generation. So the level of economic participation, it's really coming to the fore in I would say, the last 20 years. So those of us, for example, my generation who were born here, went through the education system here, fully participated in our working life here. We've only started engaging with products now, and there haven't been those products. So even understanding them, and what I'm speaking to actually is financial literacy. So there is a challenge around financial literacy in our communities. And then on top of that, we've got more immigrant communities coming in. We've also seen refugees coming because they're coming from places where, they've had to flee for their own safety. So financial literacy is a challenge. So what we've done actually is obviously come up with a product, but now we've got to go and take it to the community so they understand the product. And where they haven't participated, where they've been excluded financially before, they've just chosen to exclude themselves completely. So they've obviously not had the same interaction and the same access. So we're kind of, okay, look, not only do you have more products now, but here's how you understand the products. So it may not just be from Wahed's perspective, but there's other products out there as well. There's even conventional products, which are just as good, right? Or maybe accessible. I'm just saying general products. So Wahed, what we've done is, first of all, we try and design the products to be genuinely accessible, digitally delivered, easy to access, and they're equitable and fair in their structure. And then we've started a program of actually trying to educate the communities that we serve. Doing this podcast, for example, I remember at one point last year, I was pretty much away every weekend, either delivering and across different community groups. So for professionals, your local mosque, even in primary schools, I remember going to a scouts group and going through, how to understand investing and saving with them. So the education piece as well as the product piece. Now, the branch itself, actually, it's a good question that you asked. While a lot of bricks and mortar banks are closing down their branches, we needed an office space. We needed an office space for our staff. We wanted them to come in post-pandemic. People don't want to go back into work, but we actually realized that when you work together, the creativity is much better. So we wanted an office space, but we thought, okay, well, let's just have an open door policy where people can come in from, straight off the street if they want to engage with us. Everyone's working anyway, but we have that open door policy. So branch is, I guess, quite a glorious way of calling it, but it's just an office with an open door policy, and where people can engage with us, they can interact with us, ask questions, because they're still important. People do still exist, and they do like to speak to other people, and so we created it like that for that reason.
Yeah. And do you find people of all different walks are coming in, or do you find that it's mostly people who currently know of your offering? What does it look like to have people come into the office?
We're in a good part of town, Baker Street. Melissa's been there as well.
Oh.
Yeah, it's a nice part of town, and it's on the corner. And we've had people just walk in. They say, "Oh, what do you guys do? What's it about?" And we've got large plasma screens. It looks a little bit like I guess a modern tech store. I won't mention any brands.
Yeah.
So people like walking in.
People are looking for mobile phones when they come in.
Yeah, or laptops, or various other bits of gadgets. So they just walk in and say, "Okay, what do you guys do?"
Yeah.
And then it just engages them in conversation.
Yeah. And Mohammed, Manzil even state on your website that you're trying to create this product offering for Muslims and non-Muslims, because I think it's not just it's about creating Islamic products, but it's not necessarily about creating a single Islamic offering. It's whoever it suits, right?
Yeah, absolutely. Our thought process on, producing, manufacturing, distributing Islamic financial products and solutions is that it's designed for Muslims, but by default for everyone. No different than when you look at the parallels that can be linked in the halal meat industry. If you go to New Zealand or Australia, by default, right, they have one process to slaughter meat, and that is the halal way to process, because they export more than they consume. So instead of having two production lines, to accommodate everyone, they said, well, one can automatically accommodate both, so let's stick with that. And there's plenty of examples. Like, again, in the UK, I think Al Rayyan Bank, up to 40% of their clientele is non-Muslims, and up to 80% of their deposit holders are non-Muslim. And when you survey them and you ask them, well, why? They come back with many reasons that are non-religious. They say, well, it was a better product offering, or I love the transparency and the ethical, component to it. They had the product, the other bank didn't. I qualified for the product here, I couldn't qualify at the other bank. So there's a plethora of reasons there that don't necessarily have to mean alignment within a particular religion. And as Umar alluded to earlier in the show, that Islamic finance, Abrahamic finance predates the conventional finance that we have today. So it is the original and most, let's call it original mode of finance that should be adopted by everyone, really.
Yeah. So what we've come to summarize at this stage, it's a better value system where we're launching products that are not just about putting all the risk on customers. It's more ethical products. We've got a huge market size. It's actually not just about losing out money and trying to spend to acquire customers. Actually, we're going to get a broad swathe of the population. Feels like a few lessons to be learned by Western banks here. So Abdul Hasib, I'd love to hear where do you think the key learnings are for Western banks beyond the obvious, trying to broaden out the offering and trying to potentially moving away from interest bearing? Like, what is it that we can talk to banks to make the story compelling to get them to shift their mindsets?
So I'm going to be quite cynical about this. I don't think banks are the solution. I think they're the problem. I think what we, and I think Umar said earlier that Islamic banking is an oxymoron. I think many people in the industry feel that way. I think when we talk about Islamic finance, what we're actually talking about is for me, it's Islamic asset and wealth management. It's active risk sharing and participation using asset management and wealth management principles. That's what we're really talking about. And again, I don't think conventional banks are necessarily the solution. I think I would address it to fintechs, actually, conventional fintechs, and what they can do. And what I would challenge them to do is look at, you're already in a space where you're trying to disrupt the status quo by not being a bank. What are you doing to address the Muslim population in your geography? If they are not participating in your product, why are they not participating in your product? Are you just replicating what banks do with these sort of interest-driven contracts, or are you doing something specifically different and, as we've tried to outline here, fairer for the consumer? And I think there are some fintechs, and certainly ones in the UK that we've seen that twigged onto this opportunity. So, I'd call out PensionBee as a primary example. PensionBee, who saw that lots of people were coming to them, consolidating their workplace pensions and private pensions under one app, noticed that they didn't have an offering for Muslims, and they then launched an offering for Muslims, and then now started to partner with other Islamic fintechs to be able to provide their services. That's a real example of somebody actively looking at their consumer base and understanding who they're serving and who they're not serving, and doing something about it. And I think we need to see more of that from conventional fintech. So I would squarely direct this at conventional fintechs rather than the banks. Unfortunately, I feel the banks are beyond hope.
Yeah, I think it's difficult for the fintechs to be in this position, because it's like the barrier is so much higher for them to come onto the scene, but also it's they have the potential to drive the most impact, as we're seeing from some of the fintechs and from people here on this call. Mohammed, what do you think?
I wouldn't have said it any better. I definitely, we have to think about the banks, right? Like, I'll give you the Canadian context. Canada loves oligopolies amongst many industries, and one of them is finance or banking. We have 6 large banks that are well known, with potentially equal market share amongst the 6, and none of them are addressing the financial exclusion gap, and that not only includes Muslims, but includes non-Muslims that don't align themselves with just banks in general, because they're always look to be they're trying to take advantage of us. And a lot of the banks do fund and partner with conventional fintech, so they're well backed, they're well endowed, they have the ability to adapt, they have the ability to be agile, and there is now local expertise within Canada that can assist and support these conventional fintechs to create Sharia compliant products as a secondary offering, or turn their current products into a primary offering that is Sharia compliant by design, and default for everyone else. And so I think there used to be an education gap, there used to be an expertise gap. Not so much, of course, in the UK, because when you think about the foremost Western example, I always look across the pond to our UK partners for that. But that's now being brought over, right, to North America, which is great to see. And I think that there needs to really be this active approach to how do we address this market, because I've spoken to all the banks. They recognize that there needs to be a newcomer strategy, is what they like to call it, right? They want to tap into the immigrant populations that are coming through. They want to tap into demographics that are financially excluding themselves from participating in conventional banking. And this population has a really, really strong balance sheets, personal household balance sheets. Our when you look at the credit worthiness or the financial capability or ability of the Menzel client, it's strong, as strong, or if not stronger than what the banks are getting, and they would love to tap into, let's call it, an equal or lower risk, with potentially having the ability to attract a higher return. Like, it's the best of both worlds. This is what we literally call in the investment banking world as seeking alpha. And so why not tap into it if the expertise is available in the marketplace, to switch things up a little bit and go after an extra 2 million in Canada, an extra 5 million in the US, an extra 6, 7, 8 million in the UK, right? It's untapped, and it's there for the taking.
No, and why not feels like a perfect way to end this. We have managed to run out of time in what feels like just scratching the surface, and we've covered so much here. So firstly, a big thank you to everyone for joining. It's been an absolute pleasure, and I'm sure there's much more we can say that we maybe requires another episode or two. I'm looking at producer Laura here. But we'd love to make sure that all the listeners can find out a little bit more about you all. So I'll go around and you can let us know which platform's best to reach you. So Abdul Habsib, let's start with you.
Probably best is LinkedIn and X or Twitter.
Great. Sounds good. Mohammed?
Yes, menzel.ca, manzil.ca. You can contact us through our contact page, and we have our customer service team on standby to answer any queries that come through.
Great stuff. And finally, Uma.
Yeah, for myself, only halal fans. Other than that, on LinkedIn.
And you can find me, Amrita Rachel Pandian, on LinkedIn or here at 11FS. Thank you so much for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps to make it better, but also helps others find the show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or FinTech Insider or email podcast@11fs.com. Thanks very much and goodbye.